Hi, everybody. This is Giovanni. I am here with Marcus from Minotaur Trading System. We do our show every Thursday where we discuss about the market. We discuss liquidity. Uh, we show we have a trading system that is helping us, to accumulate our bitcoins while Bitcoin is moving sideways. So we usually show the latest moves from the indicator. Let's dive in and start to talk about the market. I'm going to share my screen. Okay. All right. So let's kind of zoom out. So the main things to point out are these. First of all, we want to look at um, what the power law is doing, right? So the power law is our model that we use all the time. We have mentioned uh, these in the past, right? I hope everybody's familiar with my work, where I've shown that basically you can describe a long-term behavior of Bitcoin with this relationship between the price and time itself. So it's actually a pretty simple relationship where you take the time from the birth of Bitcoin, you take the power to the sixth, and you get this red line. And you can see how striking it is because over the entire history of Bitcoin, in fact, you can go all the way to the birth of Bitcoin. Bitcoin has followed this path. Now, you know, it has to be understood as an average behavior because, of course, we see this deviation from the trend where we see the bubbles, and the deviation can be very large. Like in the beginning, we were up to 10 times the value predicted by the pattern. But you should notice a few things. The first thing is, this is an average trend, but then there is a lower support line that is kind of fundamental for the trading system that we use. That it can be calculated in different way using different approaches, but probably the simpler one is it's about 60% from the red line, below the red line. And you can see it touches all the major low points of Bitcoin. And it has never been violated, just maybe with a week during, for just a moment, during, the time it will reach the bottom. Even during the COVID, or this event, we barely touch it and then we bounce from it. So it's something unique that almost no other assets known as, because it's very difficult to find something that when people talk about support or resistance lines, usually they draw something by hand that is relatively arbitrary. This is calculated by math and has been valid for the entire history of Bitcoin. Um, Now the bubbles also you can see we leave the pattern, and then after deviating for about 1 year, we come back over 1 year of time, and we go back where to the support line. It is pretty amazing that over time, Bitcoin finds its general trend after this large deviation, right? And recently, you should have seen another bull run because while the power law doesn't tell anything specifically about the bubble, in fact, it basically say the bubble cancel out. Um, we can show later a graph where you can take the 4 years average, 200 weeks average, and you can see the power, basically the bubbles are canceled they, over this averaging. and the price of Bitcoin basically approximates the power law. They can be studied. The bubble can be studied using the power law because you can subtract the power law trend and then you can describe the deviations. These deviations so far have been very regular in terms of the duration of the bull run, in terms of the duration of the bear market, in terms of even the deviation, how big the deviations have been. They follow mathematical pattern. Uh, Now, it's only few points, few data points. So, contrary to the power law where you have thousands of data points, describing the bubble because we are, you know, single events that happen every 4 years is more difficult statistically, right? But there have been regularities, and if you took this regularity at face value, I have other graph I can show you later where I do these projections of what to expect, right? Is based on, okay, given these deviations have been regular, what we expect if they continue, right? That is the idea. And the projection is that by quarter four of this year, we should be at around 200K. Now, the tariffs have messed up this situation where it doesn't seem we are following too closely, right? We should be, for example, you see, once the bull run starts, we usually stay above the power law and we don't come back below the power law. It takes about 2 years to do this process to go up and then down and come back to the power law. Right now, the bull run officially started. If you make an analogy with a previous bull run in November, we stay above the power law for a little while. In fact, we follow it almost perfectly, and then we correct it. We went below. So this is unusual. I think the tariffs have a big component. The other component is also, if you look at the liquidity, the global liquidity. So what you're seeing here in terms of this purple line, it's a model. So basically, I study the relationship between the Bitcoin price and global liquidity. You can use different measures. You can add many things beside M2, but M2 does a good job, and it doesn't really justify to add more complexity because you get very similar pattern. So by using M2 alone, you can see there is actually a power law. The relationship is more complicated if you take the entire history of Bitcoin, but if you focus on the last 10 years, so it's basically a simplification. So the real picture is more complicated. There is a power law of 9.3. So it means basically you can write an equation that say Bitcoin price equal the M2. Now there is this issue of shifting. It seems that Bitcoin and M2 are shifted. You can choose different dates. I don't think there is a precise date. It's more like a range of dates, but 85 does a good job, 85 days. So if you take 85 days, then you can start to see there are many features between M2 and the price of Bitcoin that match. And in fact, you get this power law relationship that say Bitcoin price equal M2 or global liquidity to the power of 9.2. So small little changes in liquidity creates huge changes in the price. And then using that relationship, you can make some kind of a model, right? So this is what you're seeing here. There are really two models. One, the green line, I filtered some of the noise, make it a little bit smoother, and then I applied the power law relationship. The other one, it doesn't use the filter. They are very close to each other. But basically, you get a model of what the price should be if this relationship held. I will not take it at face value in terms of matching every single features because sometimes you can see the features match very, very well, but here they don't match. It's a scaling problem, right? If you go like this one matches, but this doesn't match. If you do like this, now this matches all of a sudden. So the scaling it kind of changes, but you can see there is a clear matching of features. Like here, we had the bottom, and then we went up. here we had some bumps, we correspond to these bumps. So structurally, they are related. It's just a question of determining what is the scaling, right? So the general scaling is this 9.2, but locally it changes. Sometimes probably the scaling is smaller, sometimes it's bigger. It's more complicated relationship with a simple power law. But it still gives us an idea that usually when global liquidity goes up, the price should go up, right? So, and you can see here the model right now predicts that because we had an upsurge in global liquidity. Let me rescale this thing so you can see it better. You see here is the prediction because basically to make it clear, right? We are saying there is a delay, so we shift everything forward by 85 days. So it becomes predictive, right? This is supposed to be predictive of what Bitcoin did. Like if we did this in January, for example, we could have predicted the price was going to have a correction. It seems very interesting. So if this is continues to be true, now the price is supposed to go up according to this, right? Of course, the tariffs create a big uncertainty, right? And things maybe don't follow this natural pattern, but this is what it is, right? This is what the data tell us. We will have to see if it applies. But yeah, this is what the global liquidity tell us. It's a very important indicator, macroeconomic indicator. So it's one of the clues or one of the pieces of the puzzle. And I think Marcos will show us other pieces of the puzzle, mostly based on the inherent liquidity of Bitcoin, not the global liquidity, but what we can call local liquidity. Marcos, do you want to share your chart?
Yeah, sure, Giovanni. I'll be happy to do that.
You can also comment on what I just said if you want to comment or.
Yeah, I think it's kind of interesting to see that that we have the liquidity, the global liquidity M2 cycle, economic cycle kicking in right now. Um, that's in line with what the Federal Reserve is doing. They're starting to ease monetary policy. They might not have cut rates yet, but they're injecting uh, dollars. So you can see it. You need that type of liquidity to fuel price action, right? So it's coming together on schedule. One question:
Yeah,
what's the time frame of that projection on that up move? Is it what, about 80 days or 70, 50 days on
85
that?
days. Yeah,
85 days.
yeah,
So
85 days. And people question, there's some people say 100 is better. But well, like I just showed, you
yeah,
can play this game of matching patterns. You can say, okay, I want to match this component, right? Like at the bottom. Well, maybe using a different time frame, I will
right.
get a better match, right? And I want to match this component. Okay, this component will be better with another shift, right? I think the relationship is there. It's obviously there is some kind of structural. But I have another chart. You see, I did this chart where what you see here in the lower panel, uh, because of to reduce the dependency on scaling, because what is the effect, right? There is a change in global liquidity, and it creates this change in the price, right? And in general, in average, it's 9.3. It's this power law of 9.3, but it could be that in certain area it responds less, in other area responds more, right? So I try to um, reduce that effect by calculating the winning rate. So this is what you're seeing. So the yellow line is global liquidity, and BTC is blue. And I first of all, I smoothed the two curves, and then I'm calculating the winning rate over 1 year. How many times you go up versus going down? So if you get 100, is basically in that period we won 100% of the time. Remember, this is a smoothed curve. And now you see the structures became much clearer, right? Whenever, so for example, we had a top here, the top was a little bit delayed for
for the GL, but it will have been predictive because remember it's 85 days. So by the time you are 85 days in the past, the structure starts to appear, right? Same
Right.
thing here. These were much more aligned. For example, the bottom seems much more aligned. So
Right.
bottoms are very, very good predictors. That is another good thing, right, for our algorithm because it relies on the Bitcoin support line. It really coincides with a bottom in the global liquidity. The
Right.
global liquidity, that is another is another point in trusting this support line. That is not arbitrary. There is something deep there. They seem to align. So, and the fact that they actually can predict it ahead of time, because you see, you will be behind 85 days with these, and this support, this bottom already forms in GL. So it's not just your eyes that tells us that, right? It's clear there is a very, very similar pattern in both of them.
Right.
And this is where we are right now, where in theory we should have seen already a turnaround in the price. So maybe 85 days is not the perfect delay for this particular trend. Or maybe the trend is not going to happen, maybe because of the tariff or whatever. But let's hope it does, right? So it seems that liquidity is going crazy right now. So price hopefully follows through. Yeah.
Right. So I think there's some correlations between the localized liquidity and the global liquidity. I think they're all components of each other. So I think
Yeah.
we can get some correlations there.
Okay. Are you ready
All
to
right.
share your
Yeah,
chart?
sure. Let's take a look here. See what we have. Okay. Let me see.
Okay.
All right. You can see that.
Yeah.
Awesome. All right. First of all, I'd like to thank the people from Trading Differently who came up with this algorithm that displays this data. They do a very accurate job. It's the most accurate one I've been able to find, and it's becoming an indispensable tool that I use in my toolbox. All right, so what we're looking here is we're looking at the derivatives marketplace for Bitcoin. The one particular derivative exchange that we're focusing on right now is Bybit, but there are others, Bybit, Binance, Bybit. They're some of the top ones. They all do about the same thing. So we're just going to use Bybit as the example. The reason we want to focus on derivatives is because derivatives is the price discovery, and spot follows derivatives. So where you have the leverage and the money is magnified, you're going to get the price discovery and sensitivity there first, and the spot assets, the assets that have no leverage, will correct or follow those price trends. They will adjust or arbitrage in. So this is your typical trading view style chart. This is a daily chart. We're looking at Bitcoin. We have a 200 moving average here. Nothing no one hasn't seen before. But what's interesting is um, there's a saying that you have chicken or the egg, which comes first. You have price action and you have liquidity. So liquidity attracts the price, and the price action creates the liquidity. So they're one and the same. And the larger players who move the market, who have the volume and the scale to move the market, they trade where pockets of liquidity. They need liquidity to be masked so that they can enter in and out. If you had $1 billion or millions of dollars you have to trade per day, you're obviously not going to make a market order. You're going to spread those orders out into thousands and tens of thousands of smaller trades. Also, one other thing is the marketplace is driven by algorithms. There's tens of thousands of algorithms at different time frames, all trading according to their own trading desk and strategies. But in mass, they form swarms, right? So let's take a look at let's add the liquidity in here, and we'll see the difference. So just to show you, like this price action here, there's a big drop here. There is a drop here, and then we had a rally here. So there's liquidity in here that creates this price action. So let's take a look and see what we have when we put in the liquidity. So there you go. So when you see the liquidity behind the price moves, you can see what causes the moves. So now we're looking at the liquidity, and this particular liquidity that we're seeing here, it's a composition of positions that are already accounted for. So this is not limit orders that can be canceled or adjusted. These are active positions where, for example, traders might have entered here and their stop losses and their liquidation levels are here and here and everywhere, right? So these are actual traders that are either in drawdown or um, they're in profit, but they are definitely participants that are stuck and they are waiting to be either liquidated or exit on profit. So it's a totally different aspect when you start looking at it, because this is real information that's not going to change or be canceled or adjusted. So this here, we're looking at the long side, and this up here is the short side. So what's interesting is what happens is the market, we can see it starts to take the liquidity, right? These pools accumulate over time. So how is this liquidity created? Well, when we broke out of in November, we had a big breakout to the upside where we took out and we liquidated a large short pool that put us in this new range. There's a range here that we've been stuck in for about since November to April now, where we are now. And when we break out of one liquidity zone, we start a new one. So when we came to this new zone in November, there was very little liquidity on the table because we had liquidated all the positions. So over time, the price action gets in a tight range and it starts to form new liquidity. That's what happens. So the more it ranges like this, the liquidity builds and builds and builds over time. These red areas are high intense. The green is more intense than the light blue. So over time it builds. And then there's a point of time where it gets harvested. Just like here, it was intensely built and it was harvested. So the harvesting phase is where the larger players make their move because there's enough liquidity to fill their orders. There's billions and billions of dollars trapped there now. And right now we are liquidating the long side, and there's just a little bit left, because what we're looking at here, this is 5x, 10x, 25x, and we can even add in a 3x just for good measure, which is almost like spot. So you have 3x. That's everything that's in the marketplace predominantly. Um, and here's what's interesting. Um, the retail traders and smaller traders, they get caught up in all this chop action here. And what happens is these longs are forced to sell low. They sell their positions low, and then the market moves and takes this high side, the short side liquidity, and these are forced to close their positions by buying high. So that's why 90% of traders lose, smaller traders, is because they're forced to sell low and they're forced to buy high. It's opposite of what you should be doing. You should be buying low and selling high, right? So here, when these positions get liquidated, they're going to be forced to buy it high, and then when these positions are liquidated here, they're selling low. But one interesting takeaway here is, as you can probably notice, the market is not taking any of the short side liquidity yet. It's building up and building up, and liquidity acts a lot like an electric conduit. Before it can go to higher prices, it needs a bridge to get there. Price won't move in areas where there's not any liquidity. It needs liquidity to, if you think about it from a large market making perspective, if you were to make a big price move without liquidity, with a void of liquidity, then you're going to be taking tremendous risks because they have to settle and move out of their positions as the market moves in that direction. So that's what all this local new liquidity is going to do. It's going to act as a bridge at some point that gets you to this massive amount of liquidity that's been building for months. Um, So it's actually pretty simple when you look at it. We'll know when the high side liquidity starts getting taken because it'll make an impulse and start to take it. And the market rarely takes liquidity in both directions. It's usually going to take one side, harvest that side, and then go to the other side. So right now we're in the completion phase of the long side. This, typically in a bull market, we just harvest the 5x, which we're 70, 80% done with that. So as a reference, historically, we can look at the previous summer of 2024 when we were in this massive sideways pattern. It lasted for actually um, 9 months. So we can see right here the same pattern played out very uniformly. The market built up liquidity again. It harvested the longs. This is all the 5x longs. And then once it completed the liquidation process of that, I can put the 3x in there. It left the 3x behind because it's a bull market. So it harvested the longs and started the process of reversing. We had our first signal right here when they started harvesting the short side and not harvesting the long side. And then that just continued until they completed the harvesting phase. So we anticipate something similar to happen because that's how markets work. They break out, form a new range, let the liquidity build, and it harvests. That's all it does over and over again. So to match up with Giovanni's data here, let's take a look at what we may anticipate. He said 81 days. So right here, the harvesting of the longs were complete here. This was August 4th or 5th of 2024. And then it was completed here on November 11. So that's when we completed it. So let's take a look at how long that was in time. So we're looking at it's about 96 days, 80 days or so. But remember, it's not the completion that matters, is when does it actually start. So it actually starts at about 51 to uh, 80 days. So at 51 to 80-day range is when the cycle starts to reverse right here. So let's impose that on our current situation. So if we're almost finished with the harvest, we'll give it another week and we'll move it over a little bit. So we'll give it another week here. So we'll start about here. So we'll put it a week out. Then we'll move over the same 80 days. So we know 50 days is here, 80 days is here. So we'll go with the more conservative 80-day time frame, which is right here. So that puts us at about July or so, between the end of June, 1st of July. So we'll put that marker there. So we'll stay there. And then, so now, so we're looking at some type of price action like this. We may come back and retest a little bit. Then we'll start impacting this liquidity. And once we start, we'll more than likely continue until we reach this area here. And the levels are the liquidity. Let's put in the 3x because 3x gets taken on the short side. So we're looking at about 136, 140 as the level. And that matches up almost seamlessly with Giovanni's data on the power from the power law.
Very
So
nice.
yep.
Yeah, it's nice to see confluence like that. And I'm impressed about your 80 days analysis in the previous movement, because that was a very good match with the
Yep.
global liquidity. Yeah,
Yep. And you'd have to think it would stand to reason that a lot of that global liquidity is ending up here. So that's where it's going. This is the
right.
destination for it, right? It's coming here
Yeah,
because
yeah, yeah.
all of this price action continues to build up the liquidity. So that's where it's going.
Very good.
All right.
Um, do we have any of the latest movements from the trading system? Do you have any of the charts available?
Yeah, I could pull up
Yeah.
something. Let me just See if I can just show as an example here. Um,
So let me describe a system a little bit while you're doing that.
yeah.
So basically, I'm working in collaboration with Marco's organization. Is called Minotaur Trading System, and they developed for several years this algorithm that basically is taking advantage of a volatility of Bitcoin. So every time there is a retracement in the price, the algorithm starts to buy, um, and it's also DCAing down. It's not doing it in a automatic fashion, because if you compare that with other DCA algorithms, you can see the vast difference. It has intelligence. It's able to find these local bottoms in a very, very clever way. You can see immediately from the chart. I will, let's see.
Yeah. So this is an example of an algorithm that's running. Um,
Yeah,
one thing I want to showcase here is um, just like you were saying, as a trader myself for a long time, um, it's almost becoming essential. The if you go back to your history, the Nasdaq was in 1971. That was the year I was born, and uh, electronic trading and algorithms have been around. They dominated as early as 1997, 99. It was 80% of the volume then. Now it's in the high 90s, almost, it's probably 90. It's hard to get any accurate information, but it's more than likely just guesstimating above 95 to 99%. So uh, when you think about it, if you're trying to be a discretionary trader of any type whatsoever, you really don't stand a chance because their algorithms, it's like algorithm warfare. There's thousands and tens of thousands of algorithms trading on all different time frames. Um, typically, they're in the millisecond, nanoseconds, but there's a lot of them that operate in seconds, minutes. So it's almost like the movie The Terminator, right? In a world of Terminators, you better hotwire your own Terminator to fight for you because you don't stand a chance trying to do it yourself. Um, so, what this algorithm does is it is a world class algorithm that's been developed over, we've been working on this algorithm for almost 2 years. It's in like version 6. It it uses some very sound principles because our belief structure is we want to do things that are tried and true and proven simple, but we want to do it flawlessly and continuously. So that's what it does. Um, so it uses DCA, it uses mean reversion, and it uses about 14 uh, indicators that have to have confluence before trades are made. So right here, this is a 15-minute time frame example. It is very effective at flash crashes where the market drops very swiftly. It nails these entries, and these levels here are the new average price or your cost basis in the asset. So at a time where the market is basically panicking, people are extremely nervous. It's a lot of emotions going on. The algorithm just takes positions, gets you in an excellent position, and on the rally, it gets you out and you profit on all of those positions. And it just does it over and over again.
yeah.
And without you having to be involved or emotionally charged.
So this is the current month, right? And you can see it,
Yeah, this is actually just a couple
pro-
of days. This is just a couple of days of trading here. Not
yeah,
very long. Yeah, few
yeah.
days.
So almost every few days is taking advantage. So even if Bitcoin moves sideways, or we had some correction to, you can see it
Yeah,
almost nailed down all this correction to the 70s,
yeah,
and then it doesn't need to go back to where the price was in the beginning because it's DCAing down, right? So you're
right,
much closer to the bottom, and
right,
you can see whenever
right,
there
right.
is a small correction. Because but the main thesis, why this is why I wanted to work with this company, because they are specialized only on Bitcoin. They don't do anything else.
Yeah,
And the entire thesis behind Bitcoin is that eventually Bitcoin goes up, right? It does its correction, but then it goes up, right?
right,
Unless we are in this sustained bear market will last 1 year, but even there you will have situations like this where the price corrects a little bit and then it goes
Right.
up again, etc. So it's really independent from being in a bull or bear market. Is neutral in that sense. And there are things we can do anyway during bear markets.
Right.
You can also short, etc. Now, and how the power law is integrated, right? So the idea, you see, and Marco can correct me if I say anything wrong, but basically, you see, as we go down, right, as the price corrects, we continue to buy down because in theory we don't know where this bottom is going to happen. So the best thing you can do is to try to DCA. Now these are orders become larger as you go down, right?
Right.
Uh, Now the point is how big these uh, these um, buying down needs to be, right? How many of them? I mean, we call them safety orders. How many of
Right.
these safety orders do we have? How distant they are? How big do they need to be? You will be completely in the blind if you didn't have a power law, right?
Right.
So we know the power law. It's somewhere here right now. For example, we know it's all the way down to the 40s, and so we know how much room we have, right? Before we go to this bottom that we never violated. And so that allow us, it doesn't have to be, not necessarily you're going to say, well, okay, I need to go all the way in the 40, I'm going to divide this equally by 10 or whatever. You can be a little bit more aggressive. So you can be a little bit above the power law. Or you can say, well, I don't even want to go to the power law. I want to consider maybe 20% with below the power law, right? I want to be even safer than that. So there are different things that you can do, and Marcus and other people in the team helps you whenever you are engaged with the algorithm because it requires some involvement from the user, because it's not completely hands off. The bot does everything automatically, but you still need to do some. You need to be aware of what the bot does because we're trying to do it. It's like you have to be a ninja. You have to be
Yeah.
always aware of your environment, etc. As things are happening, right?
Let me
But
let me
yeah,
just
go.
let me add to that, Giovanni. One thing that I want to make clear is I've already made it clear. I think that this is a world dominated by trading algorithms. Uh, all assets. I don't care what you trade, stocks, forex, crypto. It's dominated by algorithms, and all of this volatility that you see is created by algorithms. Even the S&P or the stock market you see on CNBC every day, when it has these flash crashes, it's the algorithms that are creating that volatility because algorithms harvest the energy and the price action of the volatility. So the point that I want to make is it's actually a misnomer when people say that you can have an AI or you can have a completely automated system. They do not exist. Even BlackRock's Aladdin or Citadel's market making algorithms, they're the biggest players in the world. Aladdin has over $25 trillion under license management. So if they don't have fully automated systems, then who are we, right? So the point that I want to make, the future is about, I think the discretionary trader is a dinosaur. There are some that can still do it, but even the best discretionary traders may be slightly over 50% with their win to loss. Um, so the key word that you need to understand is it's not automated, it's not automatic, it's augmented. So the future is going to be about operators who know how to manage or oversee an algorithm. So
Right.
this algorithm is going to do 80% of the work. You are going to partner with the algorithm. You're going to become its manager, its operator, or its pilot. And that's how it actually works.
Yeah.
Yeah,
Yeah, I tried many AI, completely AI systems,
it's
and usually
garbage.
they don't work because
Yeah,
it's garbage. Because
yeah,
maybe one day, but at that time everybody then has an
yeah,
AI,
yeah,
and
yeah,
it will be a fight between AIs. So but automation is very important because you can see these some of these traits. What happen if
yeah.
you're asleep?
Right.
How can you even
Yep.
do this manually yourself? It's impossible,
You
right?
can't.
Yeah. But if you have a logic, and plus doing things automatically takes out also the emotional aspects of things.
Absolutely.
And so you have a system, you have some rules, and these rules are followed. And the way that we implement the power law, that is, I just gave you an example. There are the
Right.
other things that we are trying to implement in the algorithm, is that it gives you like a kind of a blueprint, right,
Yeah,
of
it's like
where
our radar.
radar, right?
The power law gives us the altitude, and it helps us fly the
Exactly.
algorithm. We're not flying it
Exactly.
blind because we know where the tops and bottoms are.
Yeah, it's like an airplane, and you have
Yeah,
an altitude
right,
detector that is
right,
fundamental. If you
right.
didn't have it, of course you can do it by high, like the first aviators did it. But I will not want to fly on an airplane that is just done by high. I want to
Exactly.
the pilot to have all the different tools and all the different sensors
Like
possible.
like
And
imagine
this is a
this. Here's your power law, Giovanni, right here. Here's
yeah,
your power
yeah,
law. And
exactly.
now we know where the altitude is too high to fly the airplane, and we know
Yeah,
when we're dangerously too low. And as
yeah,
long as we let the airplane fly inside of the range of safety, then it can operate effectively. So that's
yeah.
what we're doing. The power law
This
gives
is
us these ranges.
Yeah, exactly. Yeah. And it's unique, because I don't know many other systems like these that are
Yeah,
using actively the power law. And we are always improving it and implementing all kind of different ideas and strategy and so on.
right.
So this is one of the tools that I really like. Marcus, I, the team, we use it all the time. And if you're interested, the best thing, because it's a relationship, it's not just something that we throw there for people to use without thinking. And so the best thing is to contact me. I put it on YouTube. If you're an X, you already know who I am, but I put also on YouTube a link on my X. And the best thing is you can DM me and anytime, and I can tell you more. And there is a seminar where you can see there is um, with, I'm giving you a link in the lower banner, and so you can watch that seminar. We'll have a link to the seminar too on YouTube.
Yeah.
But DM me, and we can discuss, and I will give you all the information you need. And by the way, I wanted also to announce. Let's see if I can find it. We have an event on during the conference. Right, there is a conference, Bitcoin conference in
Right.
Las Vegas, um, and I forgot to uh, pull out the event. But let me see if I can find it. But
Mm.
even for that, probably the best thing is let me see. It should be here. Yes. Let me share that with you.
We also have a couple of questions there. I see.
Yes, we can cover also the questions. Let me see if I can share the event. Where it is. Let me let me copy it in a slide. Okay, it should be able to. We should be able to see it. So the event is this thing. So basically, the conference. I think the conference ends on the 29th, right, Marcus? If I
Yes.
remember well. And so in that the same day. So if you want to stay one day more in Las Vegas, please, um, we will have an event at 4 p.m.
Yes.
Um, and it's an invite only event, but we still have a few places for people. And so if you're interested, again, if you're watching this on X, DM me, send me a DM, and let me know you are interested in participating. So basically, it will be a presentation about the power law. We will cover all the basics, and it's very cool to do this in person. It's a different type of interaction. Um, you can come and ask any question you want, and then we show you about the trading system and how we integrate the power law with the trading system. It's an opportunity to meet Marcos. Marcos will be there. Costa, the CEO of the Minotaur, will be there, so you can ask all kind of questions. And it will be great just to meet in person. For all the people interested in the power law. Anyway, there is a question. Let's look at this question. I'm going to read it, and then Marcos, you
Okay.
can answer. Since you're DCAing downward, does that mean you have to invest more the lower it gets, so that your average price is lower? For when price goes back up, you can make a profit. What do you say about that?
Yeah, absolutely. That is the DCA is one of the most fundamental trading or investment strategies that exist since the markets have existed for hundreds of years. DCA works. I'm just going to illustrate one simple illustration here.
Yeah,
This is a magic symbol here, right? So what I'm going to draw here is, let me move this algorithm out of the way a little bit. So all you really need is you need this and you need that.
wait a
that's
second. Yeah, yes,
that's the magic. That's the magic. So yes, we are DCAing. Yes, and the way we calculate that is when we set up the algorithm, we set a predetermined investment amount. We break that investment amount into multiple averaging orders or safety orders. It could be 7, 10, 20. It depends on the particular setup that we're running at the time. And then we let the magic is when you have an asset that trends higher over time, like Bitcoin, the S&P 500, Apple. You can pick whatever foundational asset that you want, but we pick Bitcoin because it has this trajectory, and then you are mean reverting and DCAing inside of there. So when you have that working together, it stacks on or exponentially is more effective. So yes,
yeah,
we do that. And then it says, yes, by averaging down, then the natural price rally or the trend of the asset takes you out. Yes, at a profit. And just
yeah.
continue to do that over and over again.
So the way it works, like for example, in my case, right, I put some coins on this exchange. That is one of the risks of this approach, right? Eventually, we are looking at other options, based on uh, you know exchanges that uh, are not linked to a particular company, um, that are completely on the chain, etc. But we are not there yet, right? Because also a lot of these DeFi exchanges don't have enough liquidity. But we use um, established exchanges, so it's part of the risk until
Right.
we mitigate that risk. But you use the entire idea is that you don't want to use your entire Bitcoin portfolio
No.
to do this, right? You want to use a percentage, a small percentage, like about 10%, for example. So you put your coins on the exchange. They are not touched by us. The algorithm doesn't touch them. And by the way, it's not that you're sending funds to us. You're doing all these on your exchange. We just use an API to be able to trade, right? And you set it up where nobody can take away funds from your account, etc. We don't ever touch your money. It's just you run the algorithm, right? The algorithm connects with your exchange, and you leave the coins there as a collateral. That is a fundamental idea. So we use derivative, we use futures. Usually we don't go much more than what 5-10
Five,
pair at most.
five,
Yeah,
10x at the most. Yeah.
yeah, five pair usually. So a little bit of a leverage is very crazy to use higher leverage than that. Like some people use 100. This when they lose all their money. You use a small amount of leverage, and then you use your Bitcoin as a collateral. And so you do this ahead. You say, okay, I'm not willing to risk more than alpha Bitcoin or whatever it is, right? And then based on that, we calculate how small this buying is, right? How many you need, like 7, 8 of them. again using the power law as our reference, and then how big these are, right? So it's not that you need, maybe I don't understand your question, but it's not that every time you do these trades, you need to add money. It's all calculated in advance. You just leave your Bitcoin as a collateral, right? And it's done all automatically. And this is how it works, right? There are times where, just to explain all the details, it's all these things are done more in detail in the seminar, but where you have to wait for a little while. You can see here, right? There are times where you wait a couple of days, few days, until you do the next trade. But it's usually is not a long time, So yeah, this is how the algorithm works. Yes, and you can see, right, from this example, you look at where you entered, right? Where the blue curve, the blue dots, the blue arrow are after the purple, right? You can study these yourself after, and you can pause it after we are finished, and you can study it. It's amazing, You can see where you entered, there are several examples here, and it's usually at much higher from where you exit because of this DCAing, right? Then you exit at a lower position because, and you're still making money. Every single, maybe this is not also explained. Every single of these exit are are all positive exits
Right.
because it is also part of a strategy. We don't exit until we get a positive gain. So it's basically 100% winning rate. This is how it works.
Yeah. Usually the only penalty is you may have to wait a little while sometimes.
Right.
That's about it.
Exactly.
Yeah.
Exactly. Anyway, so I think we covered a lot. Let's see if there is any more questions. We don't have any more questions. So I think we covered a lot of interesting topics. And
Yep.
unless, um, there is anything else Marcus, you want to add?
No, I think
Um,
uh, I think this was a very good topic that we can continue to provide good information
right.
to your audience.
Yeah.
Appreciate
So
you
let's
for
see.
having me.
Yeah, my pleasure. So let's see what happens in the next few weeks. I think we are being very
Oh yeah,
critical, right? Because all the
yeah,
everything points out to some kind of reversal, right? Of course,
yeah,
the tariffs are messing everything up, but
yep,
it's also good there is this 90 days
yep.
suspension of a tariff.
Right.
So hopefully in these 90 days, the market is a little bit more stable. But
I think I think that sets the backstory for our next stream because those updates are going to probably be critical week to week. It's going to be market movement, so everybody should tune in and see what we have to our updates on the next stream. When is that going to be?
it's going to be in 1 week from now. That is
Okay.
basically the 24th.
Oh yeah, there'll be something to talk about by then, I'm sure. So,
Yeah.
yeah.
All right. Thank you so
Okay.
much, guys.